Welcome. In this video, we will analyze when Zbcn coin will explode. Don't forget to subscribe, like, and please watch to the end to understand. When we look at the chart from a broader perspective, it's clear that the price has been moving within a downward trend line for a certain period of time. This descending trend has placed significant pressure on price movements, and despite the price touching this level multiple times, it has not been able to break upward. However, there's an important point to note here. With each attempt, the price is making higher lows as it continues to approach this trend line. This suggests that sellers are weakening and buyers are gaining strength. We can observe a typical technical analysis pattern here known as a trend squeeze. The price is essentially getting squeezed between this downward trend line, and we also see that volume is progressively decreasing. Generally, such squeezes signal a major breakout. If the price finds sufficient buying support and makes a breakout with strong volume, we can confirm that this trend line has been broken. In this case, a significant market shift is likely, and the price's potential for upward movement becomes quite high. Descending trend lines are an important technical formation that shows sellers are in control, and the price is moving downward. However, these trends must eventually break. Markets, by nature, cannot stay in continuous decline or rise. They change direction at certain intervals. The fact that the price is currently testing this downward trend line suggests that a breakout could occur soon. Particularly if buyers remain strong at this level and provide support with each approach to the trend line, a solid foundation will be set for the breakout. Such trend breakouts often occur with sharp, sudden moves. As the price gets more squeezed within this descending trend, the expectation for a breakout grows. Investors, anticipating an upward move, will begin buying heavily when the breakout happens, causing the price to rise quickly. One of the key indicators at this point will be trading volume. If volume increases significantly during the breakout, it indicates that the breakout is strong and the price could continue to rise. Additionally, the price movement after the breakout is also crucial. Typically, after a breakout, the price may pull back a little and test the broken trend line again. But we cannot just rely on trends to determine whether it will explode. We need to look at other metrics as well. Keep watching. According to Elliott wave theory, the first wave has been completed, and currently, the market is experiencing a horizontal movement in the second wave. The sideways movement of the second wave indicates that the market is in a consolidation phase, with investors trying to make decisions for new price levels. This phase typically requires patience because the market enters a period of uncertainty, but it also presents significant opportunities for investors. If the price moves below the Elliott starting point, the current wave structure would be invalidated, and the count would no longer hold. In this case, investors need to be cautious, as this could signal the beginning of a reversal in the market. However, if the price tests this level and reverses, continuing its upward movement, it creates an opportunity for the price to find its direction again, which could indicate the start of the third wave. The third wave is often considered the strongest wave in Elliott wave theory. This wave typically occurs during a period when market momentum is at its highest, and buyers dominate the market. It is one of the periods when investors can make the most profit, so the third wave offers a significant opportunity. From a technical analysis perspective, the minimum target for the third wave is typically calculated at the Fibonacci level of 1,618. When this level is reached, it is likely that market momentum will strengthen further and new highs may be made. However, what's important here is the market's ability to break through this level strongly. In other words, when the third wave begins, if other technical indicators support the price movement in addition to the Fibonacci levels, this move could last for an extended period. In Elliott wave theory, the second wave is typically a period of correction in the market where investors are uncertain about the price direction. Since investors become uncertain about the trend, many may be inclined to sell. However, during this corrective phase, investors might miss opportunities because the biggest move typically happens during the third wave. Therefore, investors need to be patient and watch the market closely. If the second wave is completed and the price starts moving upward again, a key signal for the third wave will have been given. Especially when the second wave is completed and the third wave begins, investors can see that this movement will likely continue in the long term. Many investors miss this opportunity because they become impatient and sell during the second wave. However, a careful and patient approach allows investors to take advantage of the significant opportunities brought by the third wave. This stage marks a critical period for a major upward movement to begin in the market. We must not be impatient or greedy for the third wave. It's important to remember that this resistance level is a crucial barrier that will determine the future movements of the price. Resistance can actually be seen as a point where buyers and sellers face off. As the price approaches this level, sellers tend to increase selling pressure, which can cause the price to move downward. However, if buyers can strongly overcome this pressure and push the price above the resistance level, this breakout could signal a significant buying opportunity. At this point, the likelihood of buyers gaining strength and the price climbing to higher levels becomes much greater. Such resistance levels play a critical role in technical analysis, because traders and investors often view price movements that break above these levels as a form of confirmation. This breakout can open the door for higher price targets. However, another factor to consider before the resistance is broken is trading volume. If the price attempts to break the resistance level with low volume, the breakout is usually weak, and the price may pull back to this level. High trading volume is considered a signal that the level has truly been broken and a stronger upward movement has begun. Additionally, breaking the resistance level often has a psychological effect. When investors see that the price can overcome and pass this level, they tend to buy more, which attracts more buyers into the market and drives the price even higher. After the breakout, the previous resistance zone can become a new support level. If the price can hold above the resistance level, this former resistance may now function as support, helping the price to move upward in the long term. The breaking of resistance levels not only changes market expectations in the short term, but also in the medium and long term. If the price surpasses this level and climbs higher, it can create confidence among investors and positively impact the overall market sentiment. Especially as the market pulls back, new buying opportunities may emerge. Therefore, the process of breaking the resistance level is crucial and should be carefully monitored. In conclusion, if the price breaks through this resistance level, it not only signals a short-term increase, but also opens the doors to a medium and long-term upward movement. However, the buying power required to break this resistance is a critical factor in building investor confidence. If this level is indeed broken, new target levels may emerge and the price could rise to previously unseen levels. However, if this resistance level is not broken and the price pulls back, it will also reveal the strength of the selling pressure in the market. Therefore, if the resistance level is broken, a significant upward movement is likely to begin, but if it's not, a more cautious approach should be taken. If this resistance is broken, the price may start the third wave and aim for higher targets. The RSI is commonly known for identifying overbought or oversold conditions, signaling when an asset might be due for a reversal. However, its value goes beyond that, as it also acts as a measure of the underlying strength of price movements. At this moment, the RSI indicator is clearly displaying a consistent upward trend. This trend suggests that the momentum in the market is gradually increasing, signaling that buying pressure is intensifying. As the RSI rises, it's usually accompanied by an upward movement in price, indicating that the market is gaining bullish strength. Right now, the RSI is moving steadily toward a well-defined rising trend line, indicating that it's very close to making contact with it. When the RSI touches or even crosses this trend line, it tends to signal a significant turning point in the market. If the RSI continues its upward trajectory after touching this level, it could be an indication of a sustained bullish momentum, further reinforcing market optimism. This positive shift could create a solid foundation for prices to push even higher. What's also important to note is that this RSI upward trend may be part of a larger, more complex price structure. In some cases, it could reflect a period of consolidation where the price has been moving sideways before making a decisive breakout. As RSI approaches this rising trend line and begins to show signs of accelerating upward, it often acts as a precursor to a much stronger price rally. This could lead to a further uptrend as the increased buying power and positive sentiment push the price higher. RSI movements that reflect this kind of rising trend are important for gauging momentum. When momentum is strong, prices tend to follow suit, making it more likely that prices will rise quickly and significantly. The strengthening buying pressure seen in the RSI could also draw in more market participants, further accelerating the upward movement. The more buyers enter the market, the greater the potential for rapid price increases. This upward RSI trend is a critical signal for traders, as it often correlates with price movements in the same direction. If the RSI continues to rise along this trend line and eventually breaks above it, the price may also experience a significant move upwards. Such a scenario is especially bullish, as it indicates that the market is gaining strength and is poised for further gains. Observing how the RSI interacts with this rising trend line and whether it continues to move higher will give traders valuable insight into the next phase of the market's price action. Therefore, Keeping a close eye on this RSI trend and its potential breakout is essential for predicting upcoming price shifts. If the RSI successfully breaks through this rising trend, it's likely that the market will experience substantial bullish momentum, which could drive prices to new highs. It's an exciting time, and if the trend continues, we could see a significant upward shift in market conditions. The key here is to watch how the price responds to the RSI's next move. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.